Okay, starting over. Oh, I got the giggles. Okay. Hey guys, happy for August 4th. It is Wednesday, August 4th. And welcome to our first trading room session. So before we jump into doing our normal, the top-down analysis, all that fun stuff, I wanted to spend the first like 15, 20 minutes, well, not 15, but 10, 15 minutes talking about something I believe, or some things I believe that a disciplined and profitable trader needs to understand. Because usually when most people start trading, they think about they think that becoming profitable starts with finding like a perfect strategy or having like the best indicators and things of that sort. But after like this past year and a half of me just studying and making mistakes and blowing accounts and reviewing my trades, and especially this year journaling my trades live and stuff like that, I honestly learned from experience that that's not where consistency begins, having the perfect strategy or having the perfect indicator. I believe that every disciplined, profitable, successful trader is built on the three pillars we're going to go over today, which is psychology, risk management, and strategy. So, me personally, I believe if any of these are weak, your trading will show that. And over the next 12-ish weeks, we're going to break down each of these three pillars individually. But today specifically, I did want to just give you like the foundation of what we'll be going over, because everything we do moving forward, because this is only once a week, is going to be built on these three pillars. So not only will we be going over it, but we're also going to be applying it. So let's start with the first pillar, which is psychology. So, like I said, I believe, this is me personally, just sharing what I believe. The foundation for every successful, disciplined, profitable trader starts with your mindset, because your mindset determines the type and the quality of the decisions that you make before you even press a button. Before you press buy, before you press sell, your mindset determines the quality of your decisions. So a lot of people think when they get into trading, they think it starts with your strategy, which I understand because that's normally what you see when you go looking. But if you know, or you might not know, but your emotions usually are the ones making your decision. So even if you have the best strategy, if you don't got your psychology under wraps, your strategy won't help you. Like, it could be the best strategy in the world. It could be the 99.999% win strategy. But if your psychology isn't there, it's not going to be 99.9%. So let's go over the 6 habits that it took me a while to come up with, but I feel like these are like the most top 6 habits that every disciplined, successful, profitable trader has. So starting with patience, and I'm gonna keep it short because these are things that I feel like are very straight to the point. Starting with patience. So, like I was saying, the market doesn't pay you or pay us for taking 15 trades in a week, taking 7 trades in a day, or anything like that. It literally just pays us for catching the best move that day. Like, that's it. We don't have to take 15. We don't have to take 20. Just take one good move and get out. But sometimes the hardest thing that we can do is do absolutely nothing or take no trade. That is still okay. That is still a win. That you still got into the market, watched the market, and you held your composure enough that if you didn't see what you needed to see, you didn't take a trade. That's patience. Simple, straight to the point. Discipline. So discipline is following your process even when you don't feel like it. Like, even, I know y'all see sometimes I will have a setup. I will mark up the setup. I will say this is an opportunity, and we will watch it play out. Discipline. Following the process even if you don't feel like it. That's where your consistency will come from. Repeating the same quality decisions over and over and over and over. Y'all see me mark up a zone, and I will say, I don't like where this candle closed. And then the candle will literally go into the zone and close out the zone. Discipline. That's what discipline is. Like I said, discipline, that's where your consistency will come from. You being disciplined, even when your emotions is trying to take over. Stay disciplined, following your process no matter what. The next one is following your rules. So you should, and if you don't, I have a checklist of rules that you can follow. But we create our rules because when the market opens, y'all know when I say, oh my gosh, it's 9:30, y'all see that candle just spark. You know when it's 9:30 or close to it, 9:27, 9:28, when that candle just shoot out. So when that market opens, that's literally when our emotions get loud. But before the market opens, that's usually when our emotions are the calmest. But once you see price movements, our emotions get excited or get nervous or get FOMO and all of those things. But once you have your rules protects you from your emotions. So having your rules is super important. Keeping them on a sticky note next to your desk. Y'all see I have mine on the side when we do our charts. It's right there on the side. So whenever I decide to look away, my rules are right there. If I don't have my 4 checks, I don't enter a trade. Your rules protect you. They keep you grounded. The next one is being okay with no trade days. If you were on the Zoom on Monday, that was like literally the perfect example. We didn't take a trade on Monday. That was the first day of the challenge. We didn't take a trade. We didn't force a trade just because it was day one. We could have just tried to get one because it's day one. We want excitement. We didn't do that. There was no setup. There was no trade. That's discipline. Following our rules, that builds consistency. We was patient. As you can see, we already did all of that. And we did all of this on Monday. Emotional control. Like I said, these are very simple. That's why I'm running so fast. I tried to keep it simple because it's really not that much. Emotional control. So you have to understand there'll be days you win. There'll be days you lose. There'll be days you take no trade, which is still a win. But our goal isn't to just completely eliminate our emotions, because your emotions are just signals. They're not literally, they don't drive you. Like, they're not the driver. They're just little signals, little signs along the way. So your goal isn't to eliminate emotions. Your goals are just to keep your emotions from making your decisions. That's it. Emotional control. And then the last one is your long-term mindset. So when you come into trading, you have to know that even if it's your first trade ever or your 10th trade ever, if you lose that trade, it doesn't define you. If you win that trade, it doesn't define you. If you have a losing week, that doesn't define you. If you have a winning week, that doesn't define you. Every day you get into this market, you are a brand new person, because you don't know what type of day you're about to have. You don't know what the market's going to do. So that's why we're building these habits that can be repeated over and over and over again. Every time we get onto a market, we have our same rules. We have our same habits. We repeat it every single time. Because at the end of the day, this is a long-term skill. This is not an overnight, get-rich-quick type of game or type of whatever. Like, this is something long-term. So you have to have a long-term mindset. That's our first pillar. So, wrapping this all up, if there was one thing that I want you to remember from the psychology pillar, is, again, the market rewards your disciplined decision, not your emotional reactions. So back to Monday. Monday wasn't like a boring day or a losing day because we didn't take a trade. Monday was actually a winning day or a successful day because we stayed disciplined, we stayed patient, we followed our rules. It was a no trade day. We controlled our emotions long enough to realize we didn't have to take a trade. Our plan told us not to trade, and that's what we did. No setup, no trade. That's a winning day. So now let's go to pillar 2. So risk management. And I'm trying to go through this a little faster because it's almost 9:20. So risk management. So your psychology is about controlling yourself, but risk management is about protecting, quote unquote, your future, which is like tomorrow. one thing I want everyone to understand is losses are a part of trading. There's not a strategy that will win 100% of the time, and that's okay. But there's a difference. The difference between a profitable trader and a struggling, or a trader that's struggling, isn't that like one person always loses and the other one always winning. It's that the profitable trader keeps their losses small. They manage their risk well enough that they stay in the game. Like, they don't blow their account so they don't have a trading day tomorrow. No, they keep their risks so small that they know if they lose, if price hit their stop loss tomorrow, they can still be in the game. That's the difference. So how do they do that? The first one would be capital preservation. So before we even think about making money, we have to protect the money that we already have. Every dollar in your account gives you another opportunity to learn the market tomorrow. That's it. That's all. How else do they do it? Position sizing. You have to know your number. We're going to go over that, but you have to know your number. Just because you know a play is going to move 500 points, can you risk 500 points? Okay. So that don't mean you should risk. I'm going to just let you know that doesn't mean you should risk. If your account can't manage losing 500 points, you shouldn't be aiming for 500 points. Your position size should match your account, not your emotions. Stop losses, super important. I know y'all hear about that a lot. Every trade should have a stop loss. You should know where you're exiting before you even know really where you're entering. Like, because your zone, that's the first thing we have, is our zone. So we should know where we're exiting before we even enter, or before we even know where our TP is. It's not to say, oh, I know because I know this is going to be a bad trade or whatever. It's just simply to help you manage your risk. Having your daily loss limit, which is different from a stop loss. A daily loss limit is the amount of trades you take in a day. So before the market open, you need to decide what is the maximum amount that you're willing to lose money-wise, how many trades you're going to take that day. And if you hit that number, you're done for the day. You're not going to go past it because you didn't win, or you can win more, you lost and you need to make it up. Once you hit your number, the discipline is to stop, follow your rule. And then knowing that the market will be here tomorrow. Trading was here before you, it's going to be here after you. You lose today, you win tomorrow. You lose today, you lose tomorrow. There's another day after that. So yeah. And then the last one, like I said, is long-term focus. Remembering, instead of thinking like, oh, I'm trying to be a profitable trader today, even though you just started yesterday. That's not realistic. We are trying to become consistently profitable over a long period of time. Not just today, not just tomorrow, but for over a long period of time. And that's why we want to make sure we manage our risk and protect our capital. And that's really the most important skill you can have, because that's what's going to keep you in the game. If you want to trade tomorrow, you need to manage your risk. It's simple as that. So simply put, your goal isn't to avoid losing, get used to losing. Your goal is to make sure that one bad trade doesn't take you out the game. So when we start trading with our small accounts, which is what we should be doing today, your account is your business. You have to look at it as a business. Every dollar that you have and every dollar that you protect gives you, again, another opportunity to trade tomorrow. And then the last one is strategy. This is our final pillar. This is the part that usually everybody start at and get excited about, because as a new trader, we spend a lot of time trying to find the perfect strategy and thinking what indicators we need, what our charts need to be looking like, all these things to become profitable. And the truth is, yes, we do need a strategy. As you can see, it did make it as a pillar, so it does matter, but it only works when it's supported by your psychology, which is your mindset, and your risk management, which is how you protect your future. So the first one, as a strategy, the first one is, you need a clear setup. A good strategy starts with knowing exactly what you're looking for before the market even opens. Again, no setup, no trade. That's it. Your trading plan. Again, if you don't have a trading plan, I have the checklist on the side and in the chat. But before every trade, you should already know your trading plan, or at least know Where am I going to enter? Where's my stop loss? Where I'm going to take profit? How much am I risking? You should know all of that before you enter a trade. If you don't know why you're entering a trade, you shouldn't be entering a trade. The next one, market analysis. So this is where we do like our top-down analysis, where we identify the trends, the structure, our key levels, all of that. We have to learn how to read it. We have to be able to learn how to read the market, because the chart literally is telling a story between the buyers and the sellers. Over time, as you keep watching the charts, you'll learn how to analyze the market. That's part of your strategy. Learning to adapt and not react to the market, because the market do change every day. So instead of forcing what you think the market should do, we allow price to tell us what is actually happening. So we're not trying to react to the market. We're adapting to what is happening. Like yesterday, I thought it was going to be sales. The buyers stepped in like Houdini. Like, I don't know what happened, but I had to adapt. I'm like, okay, cool. It's a buying day. I think I said neutral. I don't think I said sell. I think I said neutral, because there was a lot of buying power. That's adapting and not reacting, not getting mad because I didn't get what I want. I seen that buyers was stepping in with momentum. I'm like, okay, cool. We with the buyers. Adapting, reviewing and approving. So every trade is going to teach you something, whether it's about you or just the market. You're going to learn something. And that's why one of the things that since this year, I can't say I just been journaling like crazy. Since this year, that's why I believe journaling is important, because it's not just about recording the trade, but it's going to help you as you review your journals. Like, even if you go back 2 weeks before to a journal that you had, it's going to show you how you made a decision in the past and started making better decisions in the future. Like, it'll help you. It'll show your growth. It'll show where you didn't grow. It'll show you where you still can grow, things of that sort. It helps you become better. And then the last one is execution. So at the end of the day, it don't matter, like I said, how much you know. If you don't follow your plan, nothing else matters. Like, if you don't have your psychology, if you don't have your risk management, if you don't follow your plan, none of this other stuff really matters. A great trader isn't created because they just, oh, look, this is a great setup. It's a great trader is created by someone that consistently executes their plan. If they can do that, that creates a great trader. If you can follow your plan, follow your rules, adapt, don't react, all that stuff, and find the perfect setup, that's what creates consistently. That's what creates a disciplined and profitable and successful trader. So that's it. If you don't remember anything else from this, and like I said, it is recorded, I will post it in the thing. Just remember this: your psychology, the 3 pillars. The psychology, that's what controls your decision making. That's what will tell you what type of trader you're making, whether it's quality or not quality. Risk management, that's what protects your future. That's what keeps you in the game longer. And your strategy, it gives you a repeatable process. You don't need 5 different strategies. You don't need 7 different. You need one strategy. They all work. I'm here to let you know they all work. Pick one that's super simple, easy for you to understand, and that you can repeat every single day. That the strategy gives you a repeatable process. When you have those 3 and they all work together, that's when you can become consistent, and then now you have something to work off of to become a profitable, disciplined, successful trader. So now that we have the foundation, we can now just go ahead and apply it to today. Like I said, I wanted to keep this short, sweet, and simple. And like I said, for the next 12 weeks, we're going to go over each one and actually learn something. So let's go into it. Let's see what the chart's talking about, because it is 9:27. I ain't think it was going to take that long, but it's okay. Okay, let's see. Bye. Come on. There we go. Okay.